Hello, everyone, and welcome to today's No FOMO Charts, Stocks, and Crypto TA Charts live stream. Today is July 30th, 2023, Sunday. It's about 8:15 p.m. Eastern Standard Time here in the USA. Another big week for stocks coming up. We have Tech Week number 2, part 2. We have AMD reporting stock earnings. Most notably Apple, Amazon as well. Big brand names, Starbucks, Pfizer, Uber Technologies, and some other companies as well. Clorox, CVS Health, Qualcomm, Robinhood, Coinbase, Airbnb. It's going to be an interesting week. Now, in terms of the economic data, we have manufacturing, job openings, employment changes. The big July jobs report on Friday is going to be a potential market volatility mover. Services, average hourly earnings, OPEC JMMC meeting as well, job openings. That's pretty much the summary for the data this week coming out. Yes, USA stock market season is continuing. Last week, the FOMC raised interest rates 25 basis points or 0.25%. And yes, the recession fears are subsiding. However, the market has been uptrending for 7 months straight. And now the FOMC is saying that they're going to plan their moves on a data-dependent, even more so outlook than before. And so what are they looking at? PCE inflation, also employment rate as well, and retail sales. That's what the summary said last week. So it's interesting just to note that down if you're a stock trader investor. Now, on the crypto side, the SEC issued a warning to potentially misleading crypto company auditors, claiming that a non-audit is as precise as a financial statement audit. So this is actually, in my opinion, this could help the industry because we need stricter auditing on the financial statement side just to make sure no companies are lying or misleading. So this could be an interesting development with the SEC and crypto companies and auditors. Now, Crypto.com, they registered as a crypto service provider in the Netherlands, so by the Dutch Central Bank. This is significant because Binance and Coinbase, Binance got rejected. Binance got kicked out and they left. So this is interesting development, positive surprise win for Crypto.com on the regulatory side. Okay, let's move on. We're going to stocks now. Thank you for joining. Hello, welcome everybody. I'm streaming live on TradingView, YouTube, Twitch, and we have a Twitter group as well. First half is about stocks. Second half about crypto and requests. If you have a request, just let me know in the live chat. Going to go down the usuals as I prepare for this week. So the S&P 500, again, has been uptrending ever since October 2022, or at least for this year. So 7 months of uptrend. Okay, at least 4 months of just straight uptrend. Now we're approaching a resistance zone in the 468 area. Okay, my bullish target is still up here, but before I came on stream, I looked at many charts, and the market on the technical analysis standpoint, many stocks and indexes, major indexes, have bearish momentum and bearish divergence right now. It's just been continuing to the upside because we have had such good data, right? This is where my no FOMO mentality starts kicking in, is if we have a large ascending triangle, and if we measure this, and it's supposed to go 20%, which is basically almost 500 S&P price, it needs to come down a little bit just for a healthy pullback. Okay, we have not had a pullback since March or maybe May. We had a little small one, maybe some shorts trying to play some data move here, but it's getting pretty close to the top. Now, if we continue to have amazingly good data, the market can keep rallying. There's no problem there. But I'm not going to be surprised because we had a shooting star last 2 weeks ago A little bit of a doji last week, and we are still in the middle of earnings. So if we ever have bad earnings, I will not be surprised if we have a pullback down. The daily is still in the uptrend. So again, if it pulls back, it'll pull back to one of these EMAs here. So that would be 447 or 437. And the resistance above is a pivot point for this. Right, this pivot indicator actually changed, which is traditional. We can see it's riding just above that pivot. So I am a firm believer that algorithms are using pivot points. You see it a lot in the market. That's why sometimes it's good to just put it up to see, because the price was bouncing around on this R1 pivot point, 453. And if it doesn't really reach R2, 463, there could be a little issue there. Move on. QQQ. See, QQQ already, we're bouncing off support off the EMA on the daily. However, if this turns to a lower high, let's say bearish case scenario, earnings are bad, and this is a lower high right here at 383, then we could have the pullback down for the lower low at 372. I will know that's happening if I draw a trend line, this dotted one, and if the price violates this bottom side of 377 and continues to the downside, then I'll know that that lower side support target is 368. If we're going to keep rallying, and which is possible as well, you can see it's holding that support, and it needs to break above that resistance of 387 up here at 390. On the weekly, let me see. Again, 2 weeks ago, we did have that shooting star candle off of those financial earnings. Bullish again because last week some of the tech earnings were pretty good, but this is starting to look almost parabolic on the weekly to me, and that could be a dangerous proposition in terms of how parabolic is it going to go, right? What I want to caution people against is if I look at this chart and we know the recession interest rate bottom was October to November to December here, okay? We had a double bottom here on the weekly. That's my entry. Now, once it starts going up like this, you know, people have to make a decision. They're going to buy on this for investing, buy on this bullish engulfing candle. When we start seeing it ascending triangle pattern, but you could buy the breakout as well, and then let it go. Right, but if someone's going to enter the market tomorrow and try to invest, you know, the higher the market goes, the more risk there is. It's already up 20%. The measured move is supposed to be about 25%. So there's only about maybe 5% more before we might see some algorithms start to sell off around the 404 range. So that's why. Just a quick educational lesson here of buying support levels, and then maybe the last part is that breakout, and then let it go, and we're in profit. A visual representation for that is this. Back here in investment mode, I only needed a 5 or 6% stop loss. There's a tremendous amount of fear in the market back then, but there's a 2-to-1 play, and if somebody held that, it became almost an 8-to-1 reward to risk ratio, and that's beautiful. Absolutely beautiful. So just a quick educational example there. Now, Dow Jones as well. Dow Jones, we are starting to see a little bit of this doji candle, and it did break out of the resistance above 341. Starting to see a little bit of pulling back. Now, I just want to caution people is it did float around this resistance, and we finally broke out of it, but you know, the magnitude of that breakout has not been really realized yet. And the fact that tech stocks, if tech stocks pull back, I would imagine the Dow to pull back a little bit as well, just on that correlation. Now, not trying to sound too negative, but the Golden Cross EMAs here are still upcrossed. If we pull back, it could pull back down to about 345, and there's no real big problem there. We will know there's a problem in the market if we start downtrending for a significant period of time, maybe 30, 45, 60 days, then we have a problem. So if you can imagine, this sell-off is just big money knows this interest rate increase, it's still not good for companies. It's still not good for the American consumer. Although the data shows that the American consumer and household, we're all trying to survive and thrive through this inflation. Nobody's trying to do nothing with their lives for the most part. People are trying to work and make money and, live. So that's why the resilience of the American consumer just amazing to witness. Now, let's move on. One index I don't really look at on the stream too much, but it's still important is the IWM, the Russell 2000 ETF here. We did break out of the symmetrical triangle. And this, I remember calling this on stream saying this is a potential support area, bullish, double bottom, and look where we are now. Basically 2-3 months later, right? This is my style. This is how you have no FOMO. You just get in early to trades. When you have a double bottom like this or rectangle and you have a breakout and then a golden cross, I mean, there's one sign to get in, two signs maybe to get in, three signs, and then it's going to take off, right? So I like to try to enter on the first or second sign, and that trade would have looked like this. Right, only a 3% stop, maybe a 4% stop loss to be safe on candle body wicks. Right, 4% stop loss, and it's up 3-to-1 right now on reward to risk ratio. Now, the fact that it's already in profit, you can see the bearish divergence forming on the MACD. You want to watch out for that if that happens. So short term, we might pull back, but long term, we might actually break out. We need to retest this support level of 189 and then continue a rally. So there might be one more chance right here in 189 if it pulls back down. Try to speed up here, gold. Now gold above the 100 EMA on the daily. Just making sure this is not a lower high on the weekly, because if it crashes, it could crash down to 175. If it rallies on an upside down head and shoulders, hopefully it goes up to 185. Now, silver on the weekly, want to watch out for this. A very subtle head and shoulders pattern with a very slanted neckline. Again, if it's going to pull back down, we can see the market trying to flip-flop here and turn around. But we see 2145 is my support level. So the bullish case pulls back down and then breaks out to 24. Bearish case drops down to 20, and we'll see down the investment over time. Oil, interesting to see we're having a little bit of a breakout. Interesting to see that this entire weekly long consolidation finally starting to break out. Now, many other analysts, including myself, were very suspicious in calling this out as potential support level at $62. And the fact that we have a breakout up to $72 confirms that. Now, the next level of resistance is 77 or 82 or 90 if it's going to continue to the upside. Not quite in the overbought range on a weekly, so a little bit of room to go even on the daily as well. Just want to keep an eye out on the H4 and the support levels there. Now, UNG, interesting, like I said, UNG is going to be kind of a non-issue for me until it breaks out above this 733, the dotted yellow line. Now, I am starting to see a little bit of a potential upside down head and shoulders here on this daily, even on the midterm price action here. So again, that 738, that's a big line. Usually that's been our resistance. And so we know that if it starts to break out of there, right about the support level right now on the H4, not quite in the overbought range, but if it starts to break out above 750, with the golden cross, that's real. Finally, we might get some bullish relief to the upside because natural gas has been shorted down so strongly. It would be nice to get that 18 to 20% rally pump. It could even pump 50% up to $10, but there will probably need to be some significant amount of news to support that. Quickly looking at some of the index here, we are entering tech. So again, XOK, this big tech ETF, has been rallying for such a long time. It's even broken out to all-time highs in the past month, this month. But the momentum on the daily is starting to fade. The weekly, we do have, we had a shooting star last week, and it is in the overbought range, losing momentum. So on the weekly, again, XOK could pull back. XOC as well. We haven't had a retest of some of the lower EMAs in some time. I'm on a weekly chart right now. Real estate, we did find resistance in the 100 EMA on the weekly and still in that symmetrical triangle, right? So we hit that ceiling and there's the evening star pattern. So watch out for that. That starts to pull back down. Energy with the breakout on this weekly did symmetrical triangle and then broke out with the hammer candles. That's good. And we can also see here, there are hints on the charts where MACD histogram starting to build up that bullish momentum. Okay, that's not random. So another bit of evidence on an indicator, very simple. Consumer discretionary hitting that overbought range on the RSI. So some algo is going to take that into consideration. But see, I do want to explain to people my investment style. You could see I had 2 alerts here back in December 2022 or in March as well, right? So January, way back here. Okay, 2022, there's a potential entry, and then there's a breakout here, and we had an upside down head and shoulders and took us to the upside. It's very simple, XLY. Trade, 15 to 20%. We hit that right now. That's why trying to FOMO in right now might actually be buying a relative top because we haven't had a large higher low in a long time for about 5 months now. XLI continuing to rally on the weekly. We might see it kind of rally a little bit and fizzle out and go sideways before it starts to pull back a little bit. Healthcare trying to break out right now after a symmetrical triangle. Financials hitting a temporary resistance. But this is still good though, because we had the regional banking crisis in this area in March 2023, established a level of support and it's starting to rally up, and now we're finally here. So again, any big money playing XLF, I mean, that's 11% profit there. Semiconductors, there is a resistance here. So until we break out of there on the top side yellow line, I mean, we could definitely pull back if there's some problems with supply chain and sales and profits here with, for example, AMD and ON Semiconductor coming up this week. Now, I do want to look at a couple of those. So we know we have, starting in order, AMD. Now, AMD, I'm on a weekly right now. I did have a pullback. So this is actually a little bit more healthy. You can see we went from a downtrend to an uptrend reversal, and now we're making that higher low. It can find support here at 110 or 101. Hopefully it doesn't come down to 93. That $100 is definitely that support line. Still in the up cross. The 200 EMA here is $96. So I want to see it survive. Definitely not go below 97. But you can see we have room to rally to 133 again. That'll be nice, data dependent on the earnings. Apple on Thursday. So Apple's just been in a straight line going, I mean, basically a straight angle going up. This is like algorithmic trading and investing, big money, probably options as well, propping this up. It is the #1 market capitalization company in the world. We did break out to all-time highs on 180. That's good. That's good. It's not even in a super overbought territory on daily, although the weekly is. That's why I'm hesitant to enter into Apple now. I'm not going to enter into Apple now. It's too expensive. It's too expensive. The weekly was screaming at me back here to in January to just buy some tech stocks, and I did. Right? So that's why I'm not seeing a huge double top M or head and shoulders yet, but if you can see it, January 2022, you want to watch out for that kind of price action because it's been in an upward trend for so long. If it starts to pull back, that's when you know when you're in a little bit of trouble on Apple. Also depending on the earnings. And I'm actually looking forward to hear more about Apple GPT AI coming out from Apple, how that exactly is going to integrate with iOS devices and the features in competition with ChatGPT app, which was released on iOS earlier. Now, next one, Amazon. Remember, if you were on my stream a long time ago, somewhere in January, February, March, I was saying I like Amazon stock. Why? I like the company, first of all, the financials, but also on the technical side, Amazon, after a stock split, came down to pandemic levels. What a discount, right? What if people are asking me about stocks for discount, wait, like 6 months ago, it was Amazon, it was Nvidia, it was AMD, it was Meta, right? But now that it's up like this here in 132, high, low, high, where's my higher low? For healthy, right? If it's not, if it's going to go range bound, that's fine too. But I would like to see it. And if you're an investor, you don't want to see this, but if you're a new investor, you want to see it kind of come down, test that level of support, and then let's break up to the upside. Healthy, healthy. If it goes up too high, too fast, it might consolidate, and if there's nowhere else to go. Does that make sense? So unless we have some ridiculous crash that happens, a little pullback is fine, and test the range. Let's open up the volume profile here. You can see we had a lot of trading volume in the $93, $90 range. And you can see the next large resistance about 162, but there is a little baby support here in the 120 range. That's what I'm saying. There's a gap down here that could fill that and then rally up to 163 if the earnings are not as great. And we are in an overbought range. That's why I'm not about to FOMO into Amazon. First off, I don't need to, but also I want to see a healthier pullback just on the technical side, right? Because it did golden upcross. I want to see it test the 200 EMA at 114, and they'll get a lot more investors popping up here because that's the support line. Okay, so there could be a trade there, either for educational use or my own personal use. Now, do want to take a look at Pfizer, because Pfizer, some of these healthcare stocks like Pfizer and Moderna, they've just been beaten down so hard because COVID infections are down compared to relative to 1, 2, 3 years ago. So then now what's going on with these stocks, right? If you look at Moderna, which is also reporting earnings this week, it's at a support level. So it's kind of interesting to see that one of the major vaccine stocks, I mean, we talk about FOMO and crash, this is it, right? If you use Fibonacci and Fibonacci, the whole Moderna stock, it's right at the 0.76 level on the triple bottom support on a daily. This is an interesting spot. It's in a descending triangle. This is actually not good. Measured move, if earnings are bad, I mean, it could fall down another 75% all the way down to $27. That's a super bear target. The next target could be somewhere like 97, 80, or 71. But if they have good earnings, you could see a kind of gap fill up here on this resistance, just like some of those XLF. But although the steep of this angle is much more negative, but it's going to be interesting to see and watch that. Might partake in it, depends on what happens this week. Now, Pfizer as well has been in a huge downtrend with the sell-off. COVID emergency order was ended back in March, April, May. Although COVID infections are a little bit on the rise, I saw that on the news in terms of the small summer, almost becoming the summer seasonal illness. At this point, people are still getting positive, depending on their job requirements. But I am starting to see on the technical side a little bit of bullish divergence. It's going to be dependent on the data here. You can see the RSI here and the MACD histogram confirming that. So if they have good earnings, it could pop up to $40 easy. Now, if it pulls back down, we have to crush the 35 support on the way down first, but you could also see maybe a $33 range on the downside. That's just something that caught my eye before the stream. Okay, let's move on to crypto. Thank you for watching and following. Welcome everybody. This is the crypto section on my stream. I'm streaming live on TradingView, YouTube, Twitch. We have a Twitter group as well. And we're starting off with Total, T-O-T-A-L. There has not been much positive catalyst news. The SEC again is trying to clean up the industry as much as it can. And crypto exchanges are trying to find their regulation footwork. Now, in terms of getting approved, it's usually happening in external countries outside the USA. So I would not be surprised in the future if crypto exchanges are more of an international customer base and less USA customer base, especially if the SEC regulations kind of goes bad. Now, on the technical side, we're still in this ascending triangle pattern. Why is it ascending? Because you have a horizontal line resistance on the top, and then you have a steep line confirming the support trend line on the bottom side, and we're still in the golden upcross for now. The only problem is Bitcoin as well. We've double topped this month. So we have to break out eventually. The two scenarios is if we pull back down to support, we want to hold this 1.09 trillion on the TOTAL. We cannot lose these supports. If you're a bull, we do not want to lose that, because if this breaks down, guaranteed short selling is going to occur in the markets. Panic selling, short selling, and then we could crash down all the way back down to the low 700 millions. If you're a bull, you don't want that. You want to hold the support here. Buyers need to buy, have a rally uptrend, all the oversold on the short-term indicators, and then break out above 1.3 trillion. We just need more positive catalysts. We have not had one for about 2 weeks. Bitcoin ETF is not strong enough to really get billions of dollars of people's money flowing back into the market. We need some big news, SEC news, crypto exchange news that's positive in some way with regulation or anything. We know Binance.com is trying to change. They hired their general counsel last week, although they laid off 1,000 employees. So, even Binance trying to trim its company and try to get lean to survive. But on the technical side, we've been surviving on crypto with these Morningstar candle patterns. Actually, every support has been a Morningstar, if I'm honest. But pullback, hammer candle, bullish engulfing, Morningstar. Pullback, hammer candle, bullish engulfing. Pullback, hammer candle, bullish engulfing. So I'm not going to be surprised. Pullback, hammer candle, it's going to try to sell off. All the bulls are saying, nope, buy that, bullish engulfing. If that happens again, great. Another great spot to enter into. If somebody's a beginner, maybe paper trade that right here on the trading view. For me, I'm already holding crypto, so I need to make sure it's not going to devolve into a descending pattern. If that happens, I need to exit my trades. Okay, let's go to Bitcoin. So BTC1, I'm a Bitcoin futures because I like to see some of the gaps here. And you could use the gaps indicator. It doesn't catch all of them. Works better on a daily. So now you can see we're still in this golden up cross on the EMAs. This is the double top I'm talking about here, above $31,000 Bitcoin. So this still makes sense. It's a rising wedge pattern. Now the bearish scenario is it crashes out below the support level, tests resistance, and then we have a big problem on crypto for Bitcoin. Right? If this turns into a double top M, that's not good. So Bitcoin as well needs same logic, needs to hold that support level. If we fade down into here, that's kind of okay. We just have to hold that level. Where's this? This is $28,000 Bitcoin, and then rally up above $33,000 Bitcoin because the next resistance is 34K Bitcoin. But the fact that we're holding this is good. It's just the Bitcoin news is slow and steady, and we need to see more positive catalyst. Weekly, just to look on candles, weekly candles. Now, the reason we faded is, look at this, 3 weeks of indecision inside bar, and then it's going to pull back down. That's actually never happened in this whole year. So this could be a longer term consolidation fade, I'm going to call it. Right? If we view this as a long term, even this long term, right? It could break up to the upside one more time. All right, so just fade down into support level 28,000 and then blast off to the upside with all good news. Take a quick peek at some of my other total indexes as well. Sometimes you'll find some hidden clues here. So total 2, which is everything excluding Bitcoin, you're starting to see a bit of a upside down head and shoulders, which could be bullish. We need to break above the neckline of 606 billion neckline, the total 2 index. Total 3, so it's all cryptos minus Bitcoin and Ethereum, so this is essentially all altcoins, is consolidating right now in a larger symmetrical triangle. But I do see this double bottom here above 294 billion. So as soon as we break out, this could be good because there's quite a long ways to go. And if you zoom way out, then maybe somebody could call this an upside down head and shoulders with the slanted neckline, which is also bullish. Now, moving on to something like Bitcoin dominance, BTCD. we can see, like I was saying last time, is we bottomed down Bitcoin dominance down here at 38%, and we hit the resistance level, and it's going to pull back now. So it's about 48% to 49%. Actually, to be accurate, 49.81%. But it went parabolic. So the fact that it did that high, low, high, low, high, low, it needs to pull back, test that 48.58%, and then blast off to the upside. I want to see it break above 50% and hold above that. That'll be good for crypto. USDT dominance, just to check the stable coin here. We did have a little bit of a bounce there, which is why Bitcoin sold off. We don't want to see this rally too much because that would mean that people are flowing back into USDT in terms of the market cap dominance here. Just want to watch out for that as it moves. So moving on to Ethereum. Ethereum is in a similar spot to Bitcoin, and that's riding that rising wedge pattern up. But the thing with Ethereum here is it's actually lost that support level, the old one, so I have to readjust my trend line to encompass the wicks for the market maker wicks. Now I'm going to lower this trend line down here. Just draw a new one to go faster. There we go. So now we can see the lower trend line is this 200 EMA support level. So 1700 to 1800, you know, really hold that. Hopefully this is upside down head and shoulders and we blast up to the upside. That'd be good. We need that. We need to break above the 2000 level on Ethereum and get some hype really going on. But you can see the momentum's faded. We had some nice momentum and then the SEC lawsuit happened. So until we see significant change there, I'm not expecting the crypto market to move that much. Now, Binance Coin, slightly different. It is in a downtrend, okay? Now, I'm not going to push this too much on people, but we have to think about it two ways. If Binance survives, they're probably going to be stronger after the SEC lawsuit, okay? So it is in a descending triangle, but we're holding, see if we can hold that support. 205, 207, 213, 216 dollars. So if we can hold that support, it is kind of rallying a teeny bit here inside of this. I'm just going to call it a symmetrical triangle here, and the measured move there is about 9%. So if it does rally, it could rally up to 270. That would be good. And if it survives big time, it could go all the way back up to 300. The inverse is also true. We lose 9%, take me right down to basically the support level of 222. So watch out for that. On the weekly, we're seeing that it's bouncing off the 200 EMA and it's starting to build momentum, not quite oversold. It's not as big as previous MACD histogram, but it's starting to show some signs of life a little bit. Solana is good that it's above the 200 EMA here, and it looks like it almost wants to golden cross. Now, Solana, I believe, is on the list of the SEC, quote unquote, acting as a security coins. So I just want to be aware of that, but it did have a breakout this entire month. So if it doesn't crash back down, there's something good happening here in terms of high, low to 20, and then maybe another higher high, right? This is a huge consolidation effort. And if it can rally above that, that'd be very nice to see on Solana and some of these coins. Now, Cardano is essentially going sideways. See resistance. I see a support level. Could actually draw a large parallel channel here just to help it make sense to people. And we're approaching that middle heart line. Now, again, I did say, I remember saying last month that yes, it could crash down here, but this is that level of support. That's why I drew 2 bars. And if it rallies up like it did, I mean, that's a nice profit. So 24%. It's just somebody might have gotten stopped out on this super sell-off FOMO candle here in terms of the short seller candle. Sometimes, you know, stop loss stops you out actually, and the trade's not over, right? So if it doesn't keep crashing, I would have entered again if I was a crypto day trader or something like that after that day is over, and the support stop loss by 8%. But right now, it would have been a 3-to-1 play, reward to risk. Even though there's a lot of fear, we rallied on Bitcoin, so it was good. Now, XRP. This is what I'm talking about in terms of the trade setup. Now, multiple ways to look at this. How do I know how to enter? Well, it's going up. It was rallying. And then we had the breakout, right? So last stream or 2 streams ago, I was saying there's support, 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 support. To me, when I see support, that means buy, 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 right? In terms of me, I'm talking to myself right now. Educational paper trading wise, those are interesting levels of entry because it's discounted price. And if you know your level 2, which if you go to like Binance.com and you just, you open up the trading panel, you'll see a level 2, or you look at Google what a level 2 is, the representation of buyers and sellers on an exchange for a particular asset, is you'll see there's all these bought orders there, right? So you have to understand, where are we not going below? It's like if you go to the store every week. This is an education example now. You go to the store and let's say I'm trying to buy iPhone 14 or iPhone 15 is coming out. Let's say iPhone 14, right? And I see iPhone 14, 4,000 USD when I go into a store. And then next week it's 900 USD. It's still brand new. Next week it's 800 USD. Next week it's 700 USD. Then one time I go in and it's 500 USD. Next week it's still 500 USD. And then I go next week it's 600 USD. Then I know, oh, I bottomed out at 500. Right? And so me as a buyer, and it's still brand new, if I want that and I know the product and the company is not fraud or too much fraud or anything like that, and I like this coin, I did my due diligence research, it's enough for me to enter. So here when I see, oh, Ripple hitting 31 cents, 32 cents, 31 cents, 30 cents, and then it doesn't go below that, you have upside down head and shoulders, multiple support level, simple, just buy it, buy. No more thinking, just buy. Risk reward on, my stop loss below that level, and I'm saying I believe and I know that we have a price support down here, and time to risk on, trade on. And then once you get rewarded for that, if I'm early enough, I get big reward. Sometimes you get 100%, 150%, or 75%, and that happens. Now, if someone's trying to enter right now, it's much harder because you have to wait for a support level to see, okay, where's the next dip going to be? Because it's already golden up cross right now. We already broke out of that upward rising wedge. Now it's consolidating now. We can see it's kind of flagging right now. So if it's going to break either way, it's plus or minus 25% over time. And it's been death crossed on the H1 already. So this is not really the greatest spot to try to enter into XRP. Because it's so high. I want to see it at least maybe pull back down a little bit to about like a 61 cents, maybe even a 55 cents. Worst case, 50 cents, and then try to re-enter there. Or if this starts to break out, then you have to try to catch it. But that's why I try to enter in trades as early as possible so I don't have to chase anything. That's what I learned in my life of trading. If I'm chasing a stock, if I'm chasing a crypto, if I'm chasing a chart, I'm too late. So what helped me improve my process is longer term viewpoint and then understanding supply demand, level 2 support levels, technical analysis. What is this company? What was good that was happening with XRP? I mean, they won that little SEC lawsuit. That was like 4 months ago, a little bit, the first news about that. And then we finally had the big news in July, and that's why we had this huge pump. So if somebody's really kind of doing their due diligence, paying attention to crypto news and the charts, even just like once a day or once a week, there are still opportunities. Now, AVAX, even though this is a SEC list, not a security coin, or it's kind of difficult. I'm just going to say it's a SEC listed SEC flagged coin. Let's just put it like that. Okay, you could go to CoinMarketCap and see the list for yourself, but all I'm saying is there's support down here at 1043, and if this rallies to the upside, maybe 1550. That's why. See, even if I had my paper stop loss, is a huge stop loss though, 30%. So definitely not full capital, but I would not have got stopped out. I barely survived this paper trade, right? And then it's still here. So this entry here at 1422 is actually not good. I would like to enter in at like $11. That's way better and much tighter. And then you can have half the stop loss. So I could double up my position size if I think this coin is going to survive, and then it could go 83 to 166%. It's still risk, however, because nobody knows the future exactly and if this coin is going to survive or not. That's why there's risk right now. DOT is very similar. You can see it double bottomed at 430 and see if it can survive this upside down head and shoulders and try to hit this upper 770. Dogecoin, we start to see some Dogecoin pump news from coming out from Twitter, Elon Musk a little bit. At one point, when he changed the Twitter logo, I thought he was going to change it to Dogecoin logo, but that would have been too much, almost borderline shilling, right? So change it to X, but Dogecoin, again, support. When I put my technical trend line here, very simple, support, support, support. So where am I going to buy? It would be incredible if I was awake this one day and then bought this support wick. Sometimes I love doing that. It's happened to me before. Sometimes you luck out on the timing and you just buy the absolute bottom of the move. And it's great. For now, though, it's trying to hold this support level riding above the EMAs. Let me zoom in for people who can't see. It's riding. You can see that it's starting to stair step up. In the short term, that's good. So it's riding the support. So even here, enter, buy, 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 and then let it go. Let it run. Now, if you're a short, you on the resistances, short, 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 short on the top side, right? It's just a matter of if somebody's awake or not with proper risk management. So the next support level that I see here on this crypto, somewhere in this 7467 range. You can see all the EMAs are clustered up here, so I'm imagining it's probably gonna pull back down here and maybe retest that. This almost looks like AMD chart to me, the stock chart. There might be some correlation there and try to bounce off, or just nosedive right into that support level. Shiba Inu is very similar, but you can see right here in terms of I entered Shiba Inu position. I didn't quite catch the super bottom here, but I entered in afterwards. But this is what I'm saying. Sometimes you have a capitulation sell-off. So how would I have played this? Low, high, low, high. All right, when it's super low like this, that's when you buy. You buy, buy, buy. Just to get some kind of value. Sometimes it's wrong, but sometimes it's correct. Right? That's the reason for playing these super oversold. And if I pull up a Bollinger Band, it deeply pierced out of there. That's how you know. That's not normal. That's second deviation. That's almost beyond third deviation, right? So this is an extreme anomaly if you understand Bollinger Bands, right? So that's why, and it's at a support level that's basically the bottom support. So again, understanding level 2, supply demand. Where's the support? Where's the low price history been? Will it ever go there again? It's true. This 547 level, this is the 4th time it went to that range. So I would definitely buy that. And now it's uptrending on this rising wedge. Almost turned into an ascending triangle and did break out. So that's why something suspicious happening here on Shiba Inu. It's just so low. It's been rallying up for a whole month now. We're almost in August now. July's over basically in 2 days for me. So if the breakout's going to happen, with this larger wedge, right? The target is straight up here, 1100. Immediate target's 900, then 1100. That's why I'm still excited about SHIB, because if it keeps going up, right, then you got to catch it at some point if you're a trader, right? You don't want to come too late into a trade, because then you FOMO and you buy the top and then you lose, or I lose, right? So that's why I bought the bottom of this thing. From experience, I know so many times, don't buy the top, you buy the bottom, and it's scary. Just do it, because fear is the best time to buy. That's that quote from Warren Buffett. Basically paraphrasing, you buy when the market's afraid and fearful, and you sell when they're greedy. So how does that even look on the chart? Right? Is this greed back here? No, that's fear. So you buy that. Is this greed when it goes 10,000%, right? Or 1,000%? That's greed. You sell that. When it's crashing down, 1,000%, 2,000%, 3,000%, 4,000%, 5,000%, 6,000%, 7,000%, 8,000%, 9,000%, 10,000%, 11,000%, 12,000%, 13,000%, 14,000%, 15,000%, 16,000%, 17,000%, 18,000%, 19,000%, 20,000%, 21,000,000%, 22,000,000%, 23,000,000%, 24,000,000,000%, 25,000,000,000%, 26,000,000,000%, 27,000,000,000%, 28,000,000,000%, 29,000,000,000%, 30,000,000,000,000%, 31,000,000,000,000%, 32,000,000,000,000%, 33,000,000,000,000%, 34,000,000,000,000%, 35,000,000,000,000%, 36,000,000,000,000%, 37,000 Yes, there's fear, but I know from experience, you got to wait till the extreme fear, and you'll see this big sell off, right? Or some of these big candle body pokes to the downside. That's when you get that big sell off. So a little education sprinkled in there. Let me just check the requests. I'm going 45 minutes now. Any idea why my screen would be black? Try refreshing or try a different browser. Sometimes the web browsers just glitch out, or it could be video drivers if you're on PC. Just try refreshing or try a different browser, because at least on my screen, it's looking okay. But some people have told me that sometimes the stream goes black screen, so just try refreshing. On all my system, it looks normal right now. I'm looking at like 4 screens right now. So in terms of trading view, it looks normal. So it just could be the web browser. And sometimes sometimes the trading, I love trading view and everything they gave us for free and stuff with streaming, but sometimes it does glitch out or bug out a little bit. But thanks for watching. I appreciate that. If you have requests, just let me know. I'm probably going to end in about 5 or 10 minutes. Any question about technical analysis, trading view, stocks, or crypto request, do not hesitate. Do not hesitate. Just ask me. Now's your chance before I end. All right, Matic. So Matic right now, you can see on the top side, we have this resistance. It's been holding pretty strong. And this rally, it's 100% correlated with Bitcoin, okay? If Bitcoin did not rally, Matic would not have probably rallied that hard. So you can see, this is the algos, the algorithms. Every single crypto had this super sell-off candle, and then it turned to a hammer. If you look on the weekly, it's literally the bottom right here, right? Rallying and we're resting above the 200 EMA. Now, if this holds, this is good because it's holding above the EMA. Good. Now let's bounce up to the next EMA, 90 cents or $1. Okay, that's why. You take a very long-term approach. Even here, Adam, the super sell-off. Massive fear in the market, but where? Right into a Fibonacci level. That's a buy. Even if it would dip down a little bit, because what happened in the past, I would have bought that if I was trying to trade Adam. I'm holding different crypto right now, but you know, if I was trying to enter in, this is a beautiful spot. It's literally holding that lower bottom side of that trend line, is trying to bounce up here. So if it pierces again and stays below, that's how you know it's bad and you downtrend. But if it bounces up, makes a higher low and goes in, paper trade example, I would have to buy. Buy. Target up here, 40%, and let it ride. And stick to your stop loss though, meaning you have to have a stop loss in here if you're a trader. You cannot have infinite stop loss, because sometimes in crypto, if I'm wrong on, if this, for example, on Atom, if this was symmetrical triangle, right? And this, and I'm so excited and I think this is going to go up, but it starts crashing down. If I don't have a stop loss, almost 90% of traders that I've known, and the statistic is 90% of traders lose 90% of their money in 90 days because they don't have a stop loss. Partly, there's no risk management. And somebody, if they're beginner, would have panicked when it crashed down negative 67 or negative 80%, and then they would sell down here. So where do I want to sell? At point A, or stop myself out? Point A or point B? I would have rather stopped myself at point A. Take a small loss, swallow my pride, lay down my ego when I'm trading. I don't care about that stuff. I don't care if I'm wrong. It's just I need to manage the risk. That's all that matters to me. Manage the risk, manage the reward. So then if I got stopped out here and I'm wrong, that's okay. That's what actually happened to me. If you rewind my streams, I was wrong a little bit on some of these altcoins, but I waited for a long time, right? Waited a long time, and then I re-entered and I'm up 75, 80, 100%, right? So that small loss 1 year ago doesn't matter anymore as an investor. Even as a trader, yesterday's loss, if I'm a day trader, yesterday or Friday, if I didn't lose, but for example, if I have a loss, review it, learn from it. Why? Why was the trade wrong? What was my risk management? What was I feeling? What was I thinking? Did I even prepare? Etc. And then take that and prepare for next trade. All right, somebody asked me, can I do gold USD? Okay, I did do the gold in the beginning of the stream, but let's do it again. You're asking me for Forex pairing. Okay. Gold XAU USD, just pull up ON here. Let's start with the weekly. So weekly, first thing I noticed, I have a triple top resistance zone right below 2070. Okay, and again, I'm an investor long-term mindset viewpoint. So it is starting to tighten up here. Draw my support trend line, draw my resistance trend line. Somebody could say, wait a second, isn't this some kind of ascending triangle? Possibly. It is possible. The RSI is about 53. The MACD signal line did cross down. The MACD line did cross down. But as long as it holds above here, it's making a stair-step pattern, right? So it's going high, low, high, low, high, higher, low. Support, support, support. Now it needs to break out above the resistance right about 1983. Does that make sense? It's even tightening here. So the shorts, they had their day. They had their time. They shorted this down. Even I shorted it down for a while. Made my money, made my trade, and I got out of there because there might be a potential upside down head and shoulders forming. It is still golden up cross, right? This is not death cross. Okay? So all I'm saying is if this higher low holds and we start to see the breakout, we might see a return to the $2,000 level. Maybe even beyond. But just be careful. We're in the middle of earnings right now, and we have some additional correlation and volatility that might occur, especially if the whole market pulls back down. It would be interesting to see what happens here on gold, if it's going to rally or not. It's not super oversold or anything, so I'm not looking at gold on the lowest price. There was a slightly better setup here with this double MACD histogram when I called this upside down head and shoulders in the early of July. So then somebody would have been in profit here. Now, in terms of, has it rested like this before? Let's take a look back. Last time it happened, right? This is a much more clear when the market was crashing in March, right? So there is some correlation there. Like I'm saying, the stock market needs to pull back down for a healthy continuation, right? And so for gold, if it's going to act as somebody's flight to safety, there is quite a lot of the market that needs to come down in terms of stocks, all right? So I would not recommend to look at gold in isolation. Understanding the correlations and how this is used, right? In the longer term perspective, just want to watch out for that. The only good thing I have news for you is in the H4, if you're a bull, it is still golden up cross on the H4, all right? It is not death crossed, right? That's how the shorts knew how to attack. It's not death crossed. It's up crossed. So there was a head and shoulders. We had a temporary bad time here in the neckline. So I'll give you two scenarios if you're a swing trader. If this is a bearish scenario, should crash down 1% from the price we are right now in 1932. And you could see it maybe starting to do that. That's why if we lose the support, I would initiate a short if I'm paper trading for educational examples, right? Now, if it's going to hold this and turn into a higher low and all the bulls come in and say, nope, 1950s are line in the sand, then it could rally back up to 1977. So that's how you play the day by day, the intraday, daily, the short term, right, as a swing trader. So hopefully that answers your question on gold. Okay, we have Casey with the stock request. I'll go 5 more minutes. So Casey, thank you for your request. You do not have to type in your entry risk reward stuff to me anymore because I'm trying to change it where people just have to request the ticker symbol only. So I'm trying to stay neutral as an analyst. That's what I'm saying. So BAH. See what this company actually does. Management technology consultant. Okay, and the NYSE. Interesting. This chart looks like a lot of every single tech stock, major tech stock. It just we bottomed out, right? October, January comes down, March, April, May, and then boom, we have this huge one. Now, right off the bat, just to give education, there's a huge buy signal here, just like NVIDIA, upside down head and shoulders. Once it hits the break line, you see right when it breaks above 98, 99, that's when the crazy FOMO happens in the uptrend, right? So the way to get into this early is if you found this, if anybody finds this, you see a support level, again, support, huge level of support with the breakout, or you could just say, wait a second, isn't this high or low? Or they had good earnings and you just buy it off of that. But the fact is, let's look at what happened. They had decent top line earnings on EPS and net revenue. Now, where's it going to go? See, this is the problem right now is with every stock, we're so high that good earnings, it's taking it higher, but it's not like 6 months ago. Does that make sense? So all I would say here is when it's in no man's land like this, when it's at the highest all-time highs of all time, is be careful. But also you could use a Fibonacci extension just to kind of understand some top side. So if for simple, we use pivots. We use a weekly pivot, right? It's right at that weekly pivot. You can see the upside down head and shoulders very, very clearly on the weekly here. And then with a breakout, this is like a clone of NVIDIA. How far was it supposed to go? 13%. So it's almost hitting that 26% level. So you'll know if it's going to continue to break out if it goes above 121 and the next target's 136. But if it starts to top out here and you see signs of shooting star or whatever like that, shooting star or doji, then watch out if it consolidates to side and then it could pull back down to 108. I'll just say it like that. But the fact is, it is golden up cross, but it's very, very steep. It only happened in the past month or two. So there's always outliers where things can go up as high as possible. But, you know, if this is one of those correlated with the S&P 500 or something like that, you just want to watch out. Okay, Dash. Dash has their earnings. Let me see. BAH already reported. But DASH Dash. Now we know some of the delivery and the gig economy, and I'm talking about like drivers. It's kind of gone down because the pandemic, but it still continues, right? This company got crushed, but you can see the recovery, right? This is a good chart to study about trend reversals because it started off with a downtrend actually, then changed to uptrend in the pandemic. And then when the pandemic stopped and their bad earnings, then this huge crash. That's why you want to watch out for that. Huge. And then it went to the upside, right? So studying this key right here is critical to understanding trend reversals. How do I know exactly it's when it's switching from down to up? It's the secret is I'm circling it right now, right? So that's how we get in early. This has been up for so long. It's going up. It's gone almost parabolic to this point. Now Dash, all we want to watch out for is their top line EPS revenue. And in terms of maybe some laws changing, also ascending triangle here. It's a very nice play. How much is supposed to go up? 32% to the upside. It's almost there. Now, if it does double the target to 66%, goes to 113, and we see it takes us to that next resistance zone over here on the left side. Check with pivots. That makes sense. R5. Now, it is starting to golden up cross. That's why. Now, when things golden up cross, we try to get in as early as possible to capture most of the gains, right? Because we're buying 3 days before earnings. I don't buy anything before earnings unless I have some very good analysis or something like that, you know, like for example, Amazon having Christmas sale and then buying it after that or something like that, right? On the Q1 earnings. But DoorDash, you want to be careful, 3 days to the earnings. And if it pulls back, good levels of value, 82, 77, 71. So this one, I just cautioned about the earnings. Last one, EDU. This is some kind of private educational service, or maybe like a tutoring service or something. Now look at this, just like NVIDIA, right? Huge upside down head and shoulders, test the neckline, it hasn't broken out to find its ultimate high of 90%. Actually, it did, right? The chart deceives me, right? 123% actually did hit that. Wow. So if it's going to go 240%, that's way up here, $85. The only good thing is it isn't an uptrend. Earnings are over. This seems to kind of consolidate before it makes a move. So these is very interesting consolidation boxes. What am I saying? It's this and this. You just draw a parallel channel. So we had another one. That's why resistance and support works. We measure that immediate move, right? So there's a double bottom here. There's an entry way back here in the beginning of June. And then somebody would have already been in the profit there. So, you know, most people come to me for either chart setups or education. So I'm doing both right now. So again, there was a support line on the triangle here as well. We're hitting that top resistance right now as we look at this chart. Just kind of watch out for that. If it happens to break out, it's great. It is gap filling this whole entire left side. So if it has quite a bit of resistance to break out through on the 83 level. If the market seems to pull back over this month or next month off of bad earnings or anything like that, you can see the next nice entry spot might retest the $47 range and for a good entry there. But as always, for education, having a stop loss is always good for any trades, right? But for me, my style is I like to zoom out and play bigger moves. I like 3-month moves. Why? Because they're big and explosive, right? If somebody's trying to just swing trade this, day trade this for like a day or two, then we want to get in maybe on a 15-minute or something. Try to get a support level because sometimes this thing does flash crash, 6:30 in the morning, right? Or overnight in the pre-market, and then anybody watching that on a 5-minute or something slower than that with a 15 would try to enter there and then try to capture that profit. So you just want to understand, right? The volume here is very low. It's only 4 million, and not everybody, even I didn't know what this stock was, right? So it's not a huge stock that everybody's playing. So you just want to watch out for that too, liquidity and trying to exit and enter without disturbing the level 2 bots too much. And we are in the overbought range. So again, just want to watch out for that in terms of it pulling back. All right. So hopefully that explained the charts and the with educational examples as well. Okay, we have one last question from James here. Are there TradingView training programs like buy orders, sell orders, and stop loss? You're very new to this. Okay, if you're very new to this is more an intermediate to advanced stream. But here's what I would do. If you're trying to do stocks or crypto, yes, there is a training. There isn't a training, but there's paper trading. Okay, so you open up here. Just turn off all these indicators. You'll learn that as you go. But if you're a beginner, I would start off with something like the S&P 500, SPY, or Bitcoin, BTC USD if you're trying to do crypto. But SPY, you click the trading panel, you connect your paper trading account. So this is a fake money trading. It's 100% fake trading, but it's fake money with real data. Fake money, paper money with real data. So if you want to learn how to day trade, swing trade, invest, this is the place to do it. Right here on the screen right now. Paper trading, you reset the paper trading, you get $100,000 fake paper money. And if you open up the order panel on the right side, it's the one with the arrows. Where did it go? What happened to my order panel? Okay, so they changed it. Now it's a trade button. Okay, right? The order panel is now here's a button. So you open this right here, the trade, and then you'll learn how do you put orders, right? When you're starting off, you start off as a long, right? You can watch there. If you actually go to TradingView's YouTube channel, they have a video about this. So I'm just going to refer you to them. TradingView YouTube channel, if you're brand new, trying to learn how to paper trade. And what is this button? Limit order, market stop, price, take profit, stop loss, risk reward ratio. I would refer you to TradingView YouTube channel. But that's where you go to set it up. Okay, so I would recommend 90% of traders lose all their money in 90 days. So instead of losing all your money and going bankrupt, practice with paper trading until you can become profitable as much as you can in real market hours. That's how I did it. And I studied a lot. I'm talking dozens of books. I would paper trade for hours. I would study the charts. If you want training, right? If you can't wake up, if you can't, I mean, if you have a job and you can't do 6:30 or 9:30 a.m. trading for stocks or anything like that, then there is what is called, and TradingView has a video and article about this, the bar replay. It's this button up here. It's a rewind button up here on the chart. So how that works is it rewinds the chart for you. You just click a spot, rewind, and you could play like you're watching sports tape, right? You're watching a YouTube video or something like that, and you can learn that way. You learn price action. Where would you buy? Where would you sell? What is this candle? What is going on here with the price, right? Where would you, if you make a mistake in paper trading, rewind it. That's what I do, rewind it. What did I do wrong? What is happening here, right? That's you learn by studying that way. So paper trading, if you want faster, just replay, bar replay. It's a wonderful tool. And then using the risk to reward tool, which is here on the left side, if you're long, right? You have this tool if you're trying to learn at a short. I don't recommend starting learning at a short, just meaning you're trying to buy something and you're trying to like make it go up and get profit, right? So you use this tool. So when in doubt, I would refer you to the TradingView YouTube channel and articles. If you're brand new to this, they have some really good education there. TradingView itself, articles, books. Somebody asked me this question last week. What's some good educational resources? TradingView, YouTube, Google, books. I used to go to the library when I first started, and I just opened up business books. But there are books on trading, on technical analysis out there. So just really the sky's the limit, right? In terms of how much somebody can study or how much time and money they're willing to put into learning and practicing. So it's a great question, and good luck to you on your journey. All right, thank you everybody for watching. Really good stream today, and I'm streaming live on TradingView YouTube, Twitch, and Twitter. And if you like this stream, if you learned something, you want to support the stream, please follow these channels and share the content with your friends and everybody you know. All right, everyone, hope you have a good trading week and investing week, and I will see you next time. Thank you, and bye-bye.